Welcome back, guys, and in this video we're going to be talking about different chart patterns in trading. What is a chart pattern? A chart pattern is a shape within a price chart that helps to suggest what prices might do next based on what they've done in the past. So in trading, there are different types of chart patterns, and when you see them on the chart, you have an idea where the price is going to next. This helps price prediction in the market. To understand this better, I'm going to be showing you real life scenarios, but let's get started with different types of chart patterns. First one we're going to be talking about is channels. So what are channels? They are formed by drawing trend lines to capture the region the price has been moving at a given period of time. So let's see this in a real life scenario. For example, I already have a channel here. It is called a parallel channel. We have the upper range, the lower range, and the midpoint. This just shows the range at which price has been moving. The channel is currently serving as support and resistance to the price. You can see that the price has been moving in between the channel. So this is the resistance. After touching the resistance, comes down, retested the midpoint again, and here the midpoint was serving as support. So anytime price is below the midpoint will serve as resistance, but when the price is above the midpoint will serve as support. You can see that price has been moving in between this. So if you are to be taking a trade in between this channel, you are going to be taking a long trade here, you are going to be buying here, you are going to be selling here. You're going to be buying here, you are going to be selling here. You're going to be buying here, you are going to be selling here. So at this point, there was a breakout, and we're going to talk about breakouts later in the course, because for every breakout, 80% of the time there's always a retest of that region that was broken. Do you understand? So this is what a typical channel looks like. So this is another example, and I can see a little down channel around this area, even though the price action already happened, but I'm just giving this as an example. So here is a down channel. This is a down channel. So you can also use this to take trades. So you can see that price has been moving in between this channel for a period of time. So you can use it to take trades in the market. That's basically what channels do. They just give a range of where price might be going in the nearest future. So another example of a channel might be this. This is also a channel. So for now, price has been moving in between this channel. There's a midpoint that is currently serving as resistance. So once the resistance is broken, we can start aiming for the upper trend line. This is just another example of a channel. Do you understand this now? The next one on the list is going to be double tops. So what are double tops? Double tops are shapes that signifies two tops of a price actually hitting a zone twice consecutively, and it is found in an uptrend. So let's see this in a real life scenario. An example of a double top is this region right here. This is a double top right here. So this is the resistance, for example, and the two tops hit the same region. So this two swing high hit the same region. So this is the first region of resistance, and this is the second region of resistance. So what this is showing you that the buyers can continue to push the price above this region. So in other words, price will most likely drop because there's already weakness in the market. So it always looks like an M shape. Do you understand? You want to be looking for a double top in an uptrend, because it happens at resistance. So when two swing highs hit the same resistance, the same price point, that will be a double top formation. And this is an example, a typical example of double top formation. Once you see something like this in the market, two swing highs hitting the same region and then coming down, so this is most likely going to be a double top. So this is the resistance. This is the first place that it hits the resistance, came down as a rejection, then hit it the second time, and then come down. So this place will be your support, and immediately we break this place, there is going to be a retest of that place before coming down. Do you understand? That's how market works. So if it's going to be a downtrend, we already have our swing high here, and this is the lower swing high, which represents a downtrend. Once price breaks through this place, there will be a retest, which is this area. After a retest, then you can take a short and then ride the trade down and make money through that rally. Do you understand? So that's what a double top looks like. Note that double tops is also called M formation. They look like M. You have the first top, the second top, and then this looks like an M shape. Do you understand? The top is the resistance and this region is the support. Once there's a breakout of this region, there's going to be a retest, which will give you another opportunity to take a trade, a short trade in the market. So double top signifies a downtrend in the market. So that's all you need to know about double top. It's just a shape that you need to recognize in the chart. Do you understand now? Let's clear this up. The next one is a double bottom, and a double bottom is just a direct opposite of a double top. It's just two bottoms of price hitting the same zone. So let's look for an example, and this happened in a downtrend. You want to be looking for a double bottom in a downtrend. It also looks like a W shape. So let's look at this in a real life scenario. So in a real life scenario, this is what a double bottom looks like. So this is a support region, but you can see that this price level hits the same support region two consecutive times. You can see, so this has like a W shape and is a bullish reversal pattern. So when you see a double bottom at support, most likely price is going to go up. And what happened to the price? Price went up from that region to this place. That is an example of a double bottom. So once you see a double bottom in the market, you'll be getting ready to take a long position. And remember, they are only valid at support. You want to see them at support before taking a trade, not between charts. You want to see a double top at resistance while you want to see a double bottom at support. The next one we're going to be checking out is head and shoulder pattern. This head and shoulder pattern looks like this. There's a left shoulder, there's the head, the neckline, and the right shoulder. And I'm going to be showing you in a real life scenario. This kind of formation is found in an uptrend and it signifies a bearish reversal. And once something is bearish reversal, it signifies that price is about to drop. So let's check it out in a real life scenario. So for head and shoulder formation, this is a real life scenario. You're not going to see it completely, but the more you practice in the market, the easier it is to identify all these chart patterns. What I can see in this region is head and shoulder formation, and let's identify this. So this is the shoulder, this is the left shoulder, right? This is the head, and this is the right shoulder. This is the neckline. Do you understand? And once it breaks the neckline, there's going to be a retest of that neckline before the price will continue to move down. So if you check this chart well, there's a retest of the neckline. So this is the neckline. This region is the neckline. And what happened? When the price broke below the neckline, it came back to retest it before coming down. This is a typical example of head and shoulder formation. It usually look like this in the market: the left shoulder, the head, and the right shoulder. You want to be looking for it at resistance, at the supply zone, because when you see it, it means that price is about to drop. So that's a typical head and shoulder formation for you. So the next one is inverse head and shoulder pattern, or you can call it inverse head and shoulder formation. It is found in a downtrend and it indicates a bullish reversal. This is the direct opposite of head and shoulder. So when you are looking for inverse head and shoulder, you are looking for them at support region. You are looking for them at the demand zone. So when you see them, it means price is about to start going up. So let's look for this in a real life scenario. In a real life scenario, I can see inverse head and shoulder formation in this region, and I'm going to draw it out now. This is the region. I don't know if you can see it too. I'm going to be picking it out now. So first of all, we have the left shoulder. The left shoulder is here, right? This is the head and this is the right shoulder. And what this signifies is a bullish reversal trend. So it was found at support. This is the support zone. So what happened to the price after seeing this inverse head and shoulder formation? The price went up. So the 2 points is you want to be looking for inverse head and shoulder in a downtrend at support, and then it signifies bullish reversal trend. When you see it, you know that price is about to go up. You understand?